What's up guys, Mike here. I just found the new Wall Street infinite glitch money like Robinhood had a couple months ago, because as of April 20th, oil future contracts went to negative for the first time in history. This means it dropped below $0, as in you can get paid to take delivery of the oil. This has never happened before in history. This is not a joke or a glitch. It's 100% real. The negative oil prices are serious, and now oil companies are paying people to take delivery of the excess oil. This is a once-in-a-lifetime event that has pretty much hit every single front page newspaper outlet in existence. Let's go over exactly what just happened, how it just happened, and how oil prices went negative for the first time in history, and how you can make money from this. Some of these headlines are definitely blowing this out of proportion, because that's pretty much what they do all the time anyways. Let's cover all that juicy details that you want to know about, but first you need to destroy that like button for the YouTube algorithm, because it really helps out the channel. So make sure to destroy that like button. With that said, let's all learn how we can all get paid from that juicy free oil money. So here's a few of the headlines we have all been seeing all over the news. Pretty much oil prices have plunged below $0. Oil prices turned negative. Oil prices dipped below zero as producers are forced to pay to dispose of the excess oil. Oil crushes 305% to negative $36.73 a barrel of oil, which pretty much they're saying they're paying you $36 to take the barrel of oil off their hand. The worst of all this is that 90% of you, just wait for it, 90% of you have yet still not smashed that like button for the YouTube algorithm. So if you don't mind, please make sure to smash that like button right now. Just give it a little tap. Little tap, that's all I'm asking for. Put the thumbs up. Anyways, headlines like this really make people think because price of oil is now negative, they're going to get gas for free from the gas station, right? No, just wait. It gets even better. You are going to get paid to put gas in your megatonic gas tank of a car like my Infiniti Q6 V6 that burns gas like a mother. Well, no, sorry to be the bearer of bad news. This isn't just how it works. This has been blown way out of proportion. Even though oil prices did crash about 305%, this isn't how it works, and you are not going to get paid to invest in oil. Here's exactly what is going on. The economy is shut down. We are not burning or using as much oil as before, pretty much, if any, because people aren't going and driving, because most people are quarantined at home thanks to the Chinese virus. People are pretty much not traveling. We are not going on airplanes. We are definitely not going on any cruise ships. And businesses pretty much also shut down. So pretty much the use of oil has pretty much plummeted to the ground. We are not using as much oil as before, if any. It's really in the matter of speaking of supply and demand. And right now, the amount of supply overweighs the amount of demand by a ton. So pretty much, this is how much supply we have. It goes way above the camera and you can't even see it. And this is the demand. We're not using as much oil because we don't need it. So the excess oil is just building up in these reserves. However, this is just the tip of the iceberg. Not only has the demand of oil went down dramatically, the production of oil has continued as if nothing is going on. If not even worse, they even increased production the past month with Russia and Saudi Arabia. This is all because Russia and Saudi Arabia are having their own oil war, because they want to see who could produce more amount of oil than the other to get control more of the market. So pretty much Russia and Saudi Arabia are at each other's throat. Pretty much with Saudi Arabia and Russia at each other's throat, they're also at the same time putting other oil companies out of business, like America. This has created a surplus of oil that needs to be used, and this is where the issue comes from. Typically, you would think that the solution to this is to stop producing as much oil, right? Well, obviously that would be the ideal solution, but by doing that is pretty complicated at the same time. This is because right now, during all of this, we have a standoff between different nations who want to duel it all out to become the main supplier of oil. They have declared a competition to see which one could stay in business the longest without going bankrupt. Alright, so I'm gonna sum up all of this to clarify any confusion you guys might be having to make it a lot more easier to understand. So pretty much this is what is going on right now. Basically, Saudi Arabia can produce oil pretty much under $10 a barrel. Russia can make it about under $20 a barrel, while the US makes it about anywhere from $20 to $25. Canada at around $26 to $27, and it pretty much goes up from there. The majority of the world's oil is currently produced by these top three nations: Saudi Arabia, Russia, and Iraq. And the US is slowly catching up to them. Now, let me even super simplify all of this for you guys even furthermore. So pretty much this all started in 2016 when oil prices plummeted because the US began to increase its production and increase supply of oil in the market. And lower oil prices doesn't matter much to the big players like Saudi Arabia, because as long as they sell a barrel for over $10, they make a profit. So this isn't good for the US oil companies that need oil prices to be above $20 to make any profit. So once prices drop below $20, the US oil companies lose money on oil that they make. And once announcements came that Saudi Arabia and Russia will not cut back on the oil they're producing during this illness, and oil prices pretty much plummeted. And then they said, on top of everything, they said they were going to increase oil production even more. They said they're going to produce oil a lot more. Pretty much what they're trying to do is run everyone else out of business. Even if it costs them in the short term, they're going to benefit in the long term, because once this is all over, they're going to have a lot less competition. US and other oil companies will be put out of business, and they're going to be the only two oil companies left in the game, and they're going to have a lot less competition, and they're going to be making most of the amount of money because they're going to be controlling most of the oil production of the economy at the end in the long term. So this is what's occurring at this time with negative oil prices. So when you hear negative oil prices, it doesn't mean that you get paid over $30 to take delivery of the oil. But it kind of does in this context when you look at it. When we hear negative oil prices, it refers to oil futures, or more specifically, oil futures of a supplier known as West Texas Intermediate Oil Crude. Oil futures basically is an agreement that says they'll pay a set price on this date, and then on that date they take delivery of the product and follow through with the agreement. This case, people bought oil futures at a higher price, expecting things not to change or get this bad. And as price of oil dropped, it became apparent that future price became a lot less valuable. So pretty much they're right now running out of space to hold all this excess oil. So it's a lot cheaper for people who bought oil futures to pay you to take it off their hands, and then for them to take delivery of it and where to store it. So instead of them delivering it and storing it, they're paying people to take the oil off their hand, and they go figure out where to store it and then deliver it. Alright, so let me take this and break it down even furthermore for you guys in a much simpler example. So let's say you produce and harvest rice, and you have a set amount of constant buyers for your rice. But what happens when your demand for rice goes down and you're constantly producing and harvesting more and more rice? So what's going to happen is you're going to have an excess supply of rice, and you're going to have to find a place to store that rice. But what happens when that storage of rice is going to cost you a lot more money? You have to start now to give it away for free, and because you're going to be paying a lot more for storage of rice. But what happens when people don't even want it for free? You're going to have to start paying people to take the rice off your hand. And at the same time, while you're giving it away for free and paying people to take that rice off your hand, you're still continuously producing more and more rice. And what's going on is you're producing excess amount of rice and you're just running out of storage to put it. And it's going to cost you a lot more money to pay for storage for your rice instead of giving it away for free, and even if not paying people to take the rice off your hand, because it's going to be even cheaper for you to start paying people to take the rice off your hand. And that's what's going on with oil right now. There's an excess amount of supply of oil. People have to pay tankers to take the oil and to deliver the oil to the set area once the time and date comes. But it's pretty expensive and costly to pay big oil tankers to take that oil off their hands. So it's going to be a lot cheaper for them to pay people to take the oil off their hand than to go and pay these big oil tankers that charge a heavy price to store that oil for them. Because there's a limited amount of storage available, future contracts of oil expired on Thursday, April 21st. The price of oil went negative just to get people to take the oil off their hands, because it's going to be a lot more expensive for them to find storages to pay storage utilities like oil tankers to hold that excess oil instead of giving it away for free, and or even better yet, paying people to take delivery of that oil. Unfortunately, storing of oil is not as simple as something you and I can do. It's not like you can go and empty out your pool with water and fill it up with oil and get paid $40,000 to $50,000 a contract for storing that oil, which pretty much sounds pretty amazing, but that's not how it works. However, storage is pretty costly because usually giant oil tankers that store like 2 million barrels of oil charge a price of $335,000 a day. Okay, wow, just wow, right? A day, $335,000. So it's not like just anyone can show up and take delivery of 1,000 barrels of oil and get paid $40,000 to $50,000 to put your oil in your pool until prices go back up. It doesn't work like that. It's just too costly. Sorry to be the barrel of bad news. Ha! Get it? Punt, barrel of bad news. Anyways, whatever. So when you see negative oil prices, it only refers to contracts in May for one supplier, which expired on April 21st. For future months, they have to figure out where to store all this excess oil because prices of oil are trading at much lower prices. It's not negative now because it's pretty interesting how future contracts of oil work. So let me break it down and show you how it works now. Again, let's go back to our rice example. Let's say you know you're going to make 100 bags of rice by the end of the year, but you don't know what the current market value of that rice will be by the time you harvest it. So you go and sell the rice to someone else to buy your rice with a future contract where they say they will pay you $10 a bag to buy your rice, where they will go and deliver and sell your rice in December. But if the price of rice drops by December, this kind of works out in your favor because you sold your contract for at least $10 a bag when it comes in December time to sell that rice. But if the price of rice goes up in December, you at least got paid your $10 a bag, even though the price of rice is now gone up. So you're pretty much guaranteeing yourself a certain fixed rate or price that you'll be getting for your price of bag of rice. And that's what's going on with oil. They're pretty much guaranteeing future oil price to be set at this price, that they will get this amount of money every single set date for that future contract. And even if the price of oil goes down or up, they're still making that fixed rate that they agreed upon on that future contract. But why the huge drop in price of oil, you ask, right? Well, that's because the refinery needs people to pick up their oil by April 21st. And because there's a lack of storage, people would rather pay someone else to deal with it than themselves to have to go and figure out where to store all this excess oil they agreed to buy, instead of going and paying oil tankers to store their oil and then sell it. Whether this is going to save you money at the gas station, the answer is yes and no. Yes, lower oil prices will mean that your gas will be cheaper. But the price of gas is made up of several factors, such as distribution, refining, taxes, and the cost of oil itself. At the end of the day, you still have to pay for gas, and it won't be free, nor will you get paid for it. However, it will be a little cheaper than before. And if this keeps up much longer, some US oil companies may go out of business and will have to rely on oil from foreign production. And once that happens, prices of oil will go up and we'll end up paying a lot more money for our gas, because now there's going to be less competition for companies that produce oil. So we don't know how secure this is or how much longer your oil prices will go down by. Eventually, some oil companies will be losing money and they will be forced to shut down. And we don't know how much longer this will occur or how much longer it will go on. If you want to make any money on this, you probably have to invest in oil or short oil gas companies. To be honest, I don't know how the future holds, but I am investing in some oil companies just to get my hands into the business. Whether I come out ahead or not, I don't know, but I want to have some hands in it, and it's up to you if you want to do the same or not. Hopefully I explained this well enough so you guys could go ahead and make your own decisions and be prepared for all of this at the end. Who knows, maybe the feds will also start investing in oil companies and they're going to print money, unlimited amount of money to invest in oil, because basically that's pretty much what they're doing right now anyways. Thanks again for watching my videos. I really appreciate it. As always, make sure to demolish that like button, hit that subscribe button, hit that notification bell so YouTube could alert you when my next video comes out. Also, feel free to add me on Instagram. I pretty much post there daily, so if you want to be part of that, make sure to add me there as well. Also, if you want 2 free stocks on the stock market, WeBull is giving out 2 free stocks. One for just signing up to use their platform, and the second one for making any amount in deposit. It could be $5 or $10, and I'll give you a second stock worth up to $1,400. So check out the link in the description below if you want those 2 free stocks from WeBull. Also, Robinhood is giving out a free stock. Check out the link in the description below for the Robinhood free stock as well. And then thanks again for watching my videos, and until next time, make money with Mike.